On y va? Okay. Hi everyone. Thanks for staying late. I know that there's already a lot of side events that are starting, so thank you a lot. I'm pleased to welcome this talk, this panel from the Adan, how to spend, lend, train your NFTs thanks to DeFi. And please welcome François from Nemeos, Alexis Masseron from Atlendis Lab, Mariam Kouanda from Angle Money, and of course Faustine Fleuret from the Adan. And I'm Jérémy Bescont from Capital Magazine. Nice to meet you all, and thank you for having us. Maybe we should just do a quick backstory about every business. Like François, what is Nemeos?
Hi everyone. So Nemeos is a DeFi protocol allowing anyone to buy an NFT with credit. So basically, it has multiple use cases, but we've started with a split payment solution. It's fully DeFi. There is no scoring, no need to enter banking details. It's open to anyone, and it allows to split the payment over several weeks.
Alexis, about Atlendis.
Hi everyone. So I create Alexis, co-founder of Atlendis. We're a private credit marketplace. So we're allowing small and medium businesses around the world to finance themselves using crypto. And we use NFTs to represent the depth of those companies on the blockchain.
Mariam.
Hi everyone. My name is Mariam. I'm with Angle Protocol. Angle is a DeFi protocol that specializes in stablecoin systems. We are well known for our Euro stablecoin. We launched in 2021 the first yield-bearing Euro stablecoin, now going on to launch a USD stablecoin. The work we do with NFTs is mainly related to debt management, but also allowing people to manage their position when borrowing the stablecoin.
Hi everyone, and thank you for staying before the side events. Will be efficient and will be interesting. So I'm Faustine Fleuret. I'm president of Adan. Adan is a professional body that represents, that federates, and that raises the voice of EU professionals of Web3, including NFT, including DeFi actors. So today Adan gathers more than 200 companies, French companies, but not only. And our goal is to raise all the deadlocks, all the stumbling blocks of the development of companies in France and in Europe. So we are actively working with regulators and policymakers.
So I found that this topic is really interesting because this week I published, I don't know if you read it or not, this interview with Jérémy, who has a booth in front of the Grand Palais. And Jérémy, I don't know if you're aware of this, but he recently borrowed $1 million against his CryptoPunk as a collateral. Do you see this use case of NFT becoming a trend in the next month, years?
Yeah, definitely. Because it allows to make more easily the pawn lending system. When you have the asset, you put it as a collateral, and then you get the financing. Thanks to NFT and DeFi, it's immediate, without intermediary, open to anyone, 24 some 7 days.
It is permissionless.
Permissionless. And it also could be a real use case. For example, if tomorrow NFTs will look like real-world assets, you could imagine be able to borrow, I don't know, 20,000 euros by putting a part of your house or a part of your car as collateral, thanks to tokenization, basically.
Actually, do you have an opinion about this?
Yeah, I mean, I think it's pretty much the same. We really use those NFTs not as an asset, but as a store of value for those assets. And alongside, obviously, representing the proof of ownership of this typical asset. And this is very efficient because for illiquid markets, such as private debt, which historically has been very illiquid in the traditional financial markets, it's really a game changer. Like it makes everything much more smooth in terms of liquidity, in terms of onboarding, in terms of information as well. It's much more transparent because you access those protocols. You can list those NFTs, and that makes the whole user experience at the end of the day much more faster, but also like more less expensive because obviously since it's more liquid, you have better prices and so on.
Okay, just for information, how many TVL do you have currently on the Atlendis protocol?
Currently we have 1 million, but we issued 10 million worth of loans.
Okay.
And so yeah, we're about to finance a new company in 10 days of 2 million.
Okay.
And yeah, it's ongoing effort.
Okay, Mariam?
I think it's pretty interesting what you just said about G-Money borrowing from its NFTs, because these are use cases relating to NFTs and DeFi that many people want to do, i.e. you have an NFT that's worth a lot of money, most of the time a piece of art, and you want to put that as a collateral. But these are, I would say, exceptional occurrences where the value of the NFT is tied also to the fact that it's the owner is identifiable, personable, and there is a level of trust there. So I think the next step in terms of NFT-fi, if you can contract and create that word, is really to create the infrastructure and the data sets in order for anyone to be able to do that with any type of NFTs they're owning out there. One initiative that I really like that emerged the past years is Blur, the NFT trading platform that I think, apart from allowing you to put on your NFT as collateral, gives you the data set to see the depth of the market of a specific set of NFTs, see how many NFTs are for sale, the floor. And with the community acting around that protocol, it creates kind of an oracle to have a consensus of how much the doxa or the group thinks an NFT is worth. I think if we do not have this type of data set and infrastructure that gives the global information, we cannot scale that type of use cases, and we're going there. So that's pretty exciting. Yeah.
And Faustine, with Adan, do you study this type of use case?
Yes, we're gathering lots of different use cases, including DeFi ones, NFT ones, and at the intersection of NFT and DeFi and many others. But usually those use cases are the most difficult to be understood by the people that we are working with among policymakers and regulators. Because first, it comes to their mind about things that exist. So when we're talking about DeFi or about the gamification and NFTs, it comes to their mind about there is a financial regulation that exists. So it's a big temptation to think about those new things as existing things. And actually, you raised the technical opportunities and differences of working in DeFi, having NFTs, and its opportunities for users. But what is our mission is also to explain it's an opportunity for regulation and supervision. And it's usually what they do not think about. And what we have to explain is that there is a new thing to think about regulating and supervising on those use cases. So not taking into account that there are existing things that can be regulated under financial regulations, under gaming regulations, if we speak about NFTs. And that with those new technologies, we have also more efficient things to imagine in terms of regulatory provisions that would be more efficient, but also for companies easier to implement and less costly. And at the end, helping them finally to innovate in the core use cases that they are developing. So. When it comes to DeFi, NFTs, and the worst for them, the intersection of everything, it's really difficult and it's really frightening, I would say. And so what we have to pay attention to is that the first temptation is maybe to regulate too much, and why not? Because it was some discussion in France, prohibits some of those use cases.
Okay. François, maybe Nemeos is speaking from more retail customer perspective, while Angle or Atlendis are more B2B businesses. So you have a lot of competitors on this market. Pay now, buy later, Blur, X2Y2 maybe, I don't know. There's a lot of borrowing and lending protocol like NFT-fi as well. So how do you differentiate yourself from these other competitors?
So first there is two models. There is the model where the pawn lending system, where you have already the asset, you put it as a collateral, and then you get the financing. That's NFT-fi, BendDAO, etc. Atlendis as well, but on the B2B side. And you have the use case where you don't have yet the asset and you want to buy it, but it's too expensive, and then you take a credit to buy it. And on that use case, there is no that much competitors. The biggest one, of course, is Blur, and it's protocol Blend. And this protocol is not at all the same as ours, because it's not targeting at all the same population. Blur and Blend is targeting NFT traders. Okay, it's peer-to-peer leverage trading, and we are more for NFT users, NFT collectors willing to have a simple solution to smooth the payments. If you want to keep one image in mind, if you want to buy Bitcoin, you have three options basically: buy it spot, buy it with leverage trading on a centralized exchange, or do DCA. Okay, split the payment over time. And with NFT, it's quite the same. Either you buy it spot. If you want to do leverage trading, you will use Blend. And if you want to split the payment, but in a more user-friendly way, you will use Nemeos.
Okay. Your technology is live.
The technology is ready. It's being finally, the audit is being finalized this week. So the launch is planned in the coming weeks.
Okay. So what is your market fit right now? Maybe you're quite early.
We are very, very early yet. And sometimes people ask me, but do you think really NFT buyers need money? Do you think there are really a market for basically consumer finance? Split payment is a type of consumer finance. And just to give you one figure, do you know the number of wallets which has been active in the past 6 months of OpenSea with less than $200? There are 400,000.
So the market is quite active.
So the market is quite existing, yeah.
So right now you're going more about like the JPEG audience, I mean, but would you see a world where your protocol can work for like someone who wants to buy now and pay later a tokenized painting, tokenized artwork? Is it possible?
Definitely, definitely. So first, of course, we're targeting where is the market. 70% of the NFT market today is basically PFPs, so that's where we are starting. But of course, we see a lot of use cases. In the art sector, you have to know that 20% of the art market today, and the real-world art, is financed by debt. So there is a huge market here, but it's long-term debt. So it's not with the same liquidity. So for liquidity providers, it's another risk. So it's more complex, I mean, to structure. But one other sector we're really looking into is gaming. Because you could imagine you want to buy a sword, for example, which costs $500. This sword would allow you to maybe be more performant in games, in tournaments. You can earn money with this sword, and you could then pay back your loan more easily with the cash price of your tournaments. So yeah, gaming is the second targeting sector.
I go back to Alexis. Alexis, when someone is a business, mostly businesses, are using Atlendis Lab, so the debt is borrowing and the debt is tokenized. So the NFT is basically tokenized debt for Atlendis.
Yeah, and actually, I mean, that's quite funny because you were talking about buy now, pay later for NFTs, and we actually are financing, and we did finance companies, fintech companies, that are doing buy now, pay later in the real world.
Yeah.
And I mean, that talks to me a lot. But yeah, essentially, we use NFT, like when a user deposits on our protocol in order to finance a company and earn yield, they decide at which rate they're going to deposit their funds. And we aggregate all the positions basically in the order book. It's an order book style of auction. And at the end of the day, the compounded rate of those pools give the final rate for this company. And this position that you get is represented as an NFT. Okay. So today, what it allows the users to get is a better visibility on their asset, their exposure, their position, but it also allows for secondary trades. There are a lot of companies and protocols that are building marketplaces around RWA secondary marketplaces. And in order to, for instance, because there is a lot of protocols that we are doing private debt, but there are some that are doing real estate. You have cars, watches, Pokemon cards, and whatever. And so there is a market which is being built around all of those assets that you can trade easily in a more liquid fashion, because for all those markets, the real problem at the end of the day in the previous financial infrastructure was liquidity. And
so someone on the open market could refinance a loan of a business thanks to the NFT.
Yeah, exactly. Like, I mean, I really foresee a lot of interoperability in the future between all of those protocols, all of those financial markets, because we all share the same backend, we all share the same standards, and that's the power of NFTs at the end of the day. When you are using ERC20, when you are using ERC 721, you're basically using a standard that is approved in all across DeFi, and as long as you get you follow those rules, those standards, you can actually get interoperable and integrated automatically within a whole stack of various applications, and that's an insane power in DeFi because that allows for much larger adoption and faster adoption across different financial operations and markets.
And that brings us to Mariam, because you share a common use case, because you tokenize debt. NFT is a tokenized debt also within the Angle protocol.
Absolutely. As Alexis said, the first thing for which you want to consider NFTs for is the fact that it's a standard. The first standard being ERC 721. So as you can see in the world, it's the non-fungibility of it that interests us in DeFi. As a stablecoin protocol, the mechanism with which you issue a stablecoin is mainly through borrowing module, CDP, so people would bring a collateral to borrow the stablecoin. And when they do that, instead of just issuing the stablecoin as you could do, what we chose to do is that issuance of stablecoin that we give them, the position is reflected as an NFT that has a very specific utility in the fact that if their position were to be liquidated because their collateral is no longer enough, or if there is an issue, that position can be segregated from other positions, of course, or can be transferred to the entity that will liquidate it. In any case, it's very appropriate and safer to have these positions as NFTs because you don't amalgamate all type of different financial responsibilities. That's the first thing. Secondly, also in terms of NFTs, what we're seeing, the evolutions with standards is basically the new ERC 404, for example.
I was going to ask him that.
Okay.
Of course, yeah.
So with the 404, what's interesting is really you are trying to mix fungibility with non-fungibility. To make it simple, it's you can associate the non-fungible aspect of a NFT with a token. Let's say, for example, you have a crypto kitty, and you say that crypto kitty is associated with 1,000 token. Tomorrow, you can give a 100 token to someone else, so you guys can share that value, and the NFT will be destroyed and will only be reconstituted if these tokens come together. So this may sound abstract, but it gives you the possibility to really fractionalize the utility of your NFT. Tomorrow, if an NFT is worth 1 million, maybe you won't have the use of that entire 1 million yourself. So these technical standards really allow to create composability and different financial flexibility with your NFT.
Faustine, do you think that this is the future, especially for real-world assets? This is like the new buzzword currently. So do you think that it brings like new, brings stuff, liquidity and stuff like that, transparency as well?
You were talking about buzzword. I don't know if it's the right word, but actually tokenization and NFT, because it brings to another side of Web3, aside from finance, actually brought a lot of other actors, not native ones, to think about Web3 for their current activity or to develop others. So that's why in the past few months and years, we are seeing more and more, let's say, incumbents seizing the technological opportunities of crypto assets and blockchain technologies for themselves. And tokenization is really the entry point for lots of, let's say, credit institution or financial institution that at this stage, even if Web3 is now we won't say an old industry, but we have a few years of track record right now. But it's still difficult for non-native actors to come to Web3 use cases, and tokenization is really the one that will help educate on Web3 in general. So you have today nearly all financial institutions, credit institutions that are looking closely at tokenization. Based on the activities that they have, things that they know, shares, debt, etc. But that finally understand like these opportunities of other use cases like NFTs, sorry, and like DeFi. And that's why regarding NFTs especially, we see lots of initiatives from big names. I'm thinking about PMU, I'm thinking of Casino, which are not young Web3 actors, but that are actually building Web3 applications aside of their own old activities. Yes, and so that's why even if it's a buzzword, it's actually a very concrete trend within those traditional companies that helps them to access maybe harder things to understand at the beginning. And so that's why we really have to keep explaining and to keep patient, because maybe it was hard to talk to them about cryptocurrencies, starting with that. And that's why maybe we had several difficulties to make them onboarded on Web3. But now with NFTs, with tokenization, it's really less difficult to speak about DeFi. And one example of that, DeFi and NFTs, but one example of that is that in the context of EU debates for regulation of markets in crypto assets, so maybe a regulation that you heard about before, which is MiCA, at the very beginning, there was a discussion about covering DeFi and NFTs. So MiCA, for those who don't know this regulation, will be implemented in June and in December in Europe. It's a regulation of markets in crypto assets. So it's really inspired from the traditional financial regulation of markets in financial instruments. But it is for custody of crypto assets, exchanges of crypto assets, providing advice on crypto assets. So it's really for the, let's say, investment services on crypto assets. At the beginning, there was a question of should regulate DeFi as market intermediaries, and what are those NFTs? Actually, are they financial instruments? Are they crypto assets? Should OpenSea be an exchange covered by MiCA? And I was talking about those points because we started with prohibition of DeFi and MiCA applying to NFTs. So the starting point was really, really bad. But with this education that such kind of conferences, all in your own circles, with this education that we do, we could finally make understand what I said. For example, DeFi, they did understand at the end it's a very different functioning. There are technological opportunities to think about most appropriate regulations. So finally, they decided that MiCA would not cover DeFi. And they finally understood that NFT, the NFT word, is not the financial word, and it's a very heterogeneous word that cannot be think as a market in crypto assets. So finally, MiCA does not cover all NFTs, but it remains, I mean, we must pay attention anyway, even if we feel that we escape from the worst version of what could MiCA be, because, of course, those areas won't stay unregulated. No. And so that's why I would like to warn the industry to keep aware of what's happening, because policymakers and regulators, when they are thinking about regulation, they are not experts, and so they are turning towards experts to understand what it is and what could be the best way to do. If we are not here, they will think alone, and usually they don't have the best ideas. in terms of regulations especially. So right now, there are lots of works led by French regulators and at the EU level to think about what will be the regulations of DeFi tomorrow. And actually, what is DeFi? Because we tried in a few minutes to explain what it is. But if tomorrow a definition of DeFi is too tight, it means that the rest will be covered by MiCA. So there is a first big challenge to really explain and redefine, which is very, very difficult in a legislative proposal, to define what is DeFi and to think about this regulation that is quite new. Right now, IMF and SCPR, so the financial regulators in France, are looking at what could be a regulation about smart contracts and what we could think about that is new about smart contracts. And regarding NFTs, it's the same. There is a word where NFT could qualify as crypto asset, as financial instruments, if actors, issuers that you are, or providers that you are NFTs, do not succeed in explaining that your NFT is not a crypto asset covered by MiCA or is not a financial instrument. And if you succeed in doing that, that's the best. And you have to pay attention to the work that has to be done by the European Commission on defining a regulation of those NFTs that actually we don't cover by existing regulations. So things are being built right now, so keep aware of that. And I know it's difficult, be patient with regulators and policymakers to bring them the inputs that they need to understand what would be the best for you, because maybe I did not start with that, but so there will be regulation first, but regulation is an opportunity if it is appropriate and proportionate for the confidence in the market, for the adoption, and for also the confidence of partners that you could have among institutional, among financial partners, etc. So we will have one, we do need one. If it's appropriate and proportionate, actually it's an opportunity for the industry.
Thank you for covering this topic, because I was going to ask you whether or not the regulation framework were clear enough, like, you know, to qualify this use case. It happened that I own a Mochaverse. I don't know if we have someone from the Mochaverse community, and every month for the past 2 months, I borrow some USDT against my Mochaverse as a collateral, and I don't know whether or not I'm staying in lane or not. So obviously, we still don't know. Is it a challenge for you as a business that build protocols to face this landscape without this clear framework? Angle, Atlendis, Mariam?
I understand that the question is directed to us because obviously MiCA has a clear focus on stablecoins. We, as a stablecoin protocol, are a decentralized protocol, i.e. operate according to decentralized rules with our DAOs, DAO being the community that governs the protocol and votes according to the votes that are made by the community. All decisions are made on that respect. So it's very much a decentralized functioning, both in terms of decisions that are made and how the protocol operates. And as of today, MiCA and the European regulation does not cover decentralized protocols, primarily because I think there is no functioning that allows you to deem that these are financial services in the traditional sense, because there is a non-custodial aspect that makes that each of you, in the same way that you are owning your NFTs in your wallet, when we are operating Angle protocol, you are actually at the initiative of what you're doing with our protocol. For that reason, we are not subject to MiCA. Obviously, we are waiting to see if something like that will emerge. And there's someone here in the room who is helping us with that, who's an amazing lawyer. So if you want his name, just come by me later.
Alexis.
Yeah, so at Atlendis, we have 2 products. We have the Atlendis Credit, which is the protocol allowing companies to finance themselves using crypto. So this part is not regulated. It doesn't have to, and that's why we're using crypto as well in order to, alongside obviously benefiting for all these amazing features that blockchain allows to. It also allows us to not have those requirements that lending are bound to. And then we have another product, which is Atlendis Flow, that actually allows us to on and off ramp funds that we gather using crypto to those financial companies, because most of our clients are Web2 institutions, and most of them, they don't know how to install a wallet, perform transactions on chain, et cetera, et cetera. And so if we want to have like the widest addressable market possible, we needed to actually build a new product that will facilitate that process for them. And for that particular product, we actually have a registration. So we have the DASP registration here in France, which is the Digital Asset Service Provider registration. And that actually encapsulates only this product. So we're very much hybrid at the end of the day. We have a product which is much more in the DeFi vein, and another one which is much more crypto fintech related. And because when you deal with RWAs, at the end of the day, you need to be compliant, right? Because those Web2 companies, they need to be compliant. So there is like LCBFT compliance and stuff that they need to make sure they respect. And so we make sure that we do comply where needed to, and where it doesn't need to be compliant, well, we're just following the industry standards.
Okay. François, I don't know if my mic, when Jérémy borrowed $1 million against his CryptoPunk, I don't think that he went through KYC. Do you think that it's going to stay like as easy as this? And do you plan to implement KYC for your solution?
Not sure it's going to stay like this. But that's actually a bad, not a problem, but the power of DeFi is that it works autonomously. So you could basically access everything without being able to verify your credit account, etc. And that's basically out of the strength of our protocol, is that you can access a credit, but without having to prove that you have this kind of revenues, this kind of wellness. It's open to anyone because DeFi allows, thanks to collateralization, it allows to secure the loan itself. So yes, I think we're gonna. So that's a really good thing that Adan saved DeFi from the first Mika space. Thank you for that, because it allows us to build our solution. But I'll definitely hope that the future regulation of DeFi will be less, restrictive than, for example, the financial institutions, so that we can keep this liberty, this free access to anyone. In my opinion, that's the real strength of DeFi.
Okay, maybe one last question. Regulation aside, what do you think, all of you, what are the main challenges for this NFT Fi to be mass adopted in the future? Yeah.
One thing for me is zero knowledge proofs, because you were talking about no KYC for borrowing and all these stuffs. I think in order to take that to scale, we would have to be able to manage identifying people, what they own and how they own it. While doing that, you want to keep the core identity of DeFi, which is permissionlessness. Everyone being able to access, but also not sharing their information when it's not needed. And that solution for me resides in zero knowledge proofs, being able to leverage the technology that allows you to prove something without disclosing that information. I think when we get there with applications that are easily usable within DeFi protocols, then we can take NFTs and DeFi to the next level.
On my side, I do believe it's also user experience and multiplication of use cases. NFT finance is really at the beginning of what it can do. We see every day new use cases. I don't know if you see something. Now you can put your Bored Ape in a protocol. It generates a loan, and this loan is automatically put back in DeFi. And so if you have a yield difference, basically you can just take your apes and get a yield. That's crazy. So we're not at the end of what NFT
Enjoy
finance.
while it lasts, yeah.
That's going to be a very interesting space, in my opinion.
Alexis, Faustine, I don't know.
Yeah, I mean, I think they said everything. I really agree on the identity part and the aspect of preserving the identity and not having to share exactly your wallet address every time you want to prove you own this punk. That plus obviously like the infrastructure. That is there is a ton of stuff that are being built right now, and so that's very obviously that looks very refreshing for what's to come.
Faustine, you got the last word.
And I'm sorry, I'll go back to regulation.
Yeah, of course. Yeah.
But just to let you know what's happening in France in the very short term, we are expecting in the next weeks the Parliament to adopt the new regulation, French regulation of Web3 gaming. So you probably know about Sorar, maybe Comet, maybe lots of others actors. But so those Web3 gaming applications will be regulated in France in the short term. It's a French, let's say, experimentation because the law will. This will be an experimental regime for 3 years, and we are obviously expecting that it will inspire afterwards what the EU will do as a framework for Web3 gaming, and there will be implications because of the interactions with DeFi that could maybe exist, or that maybe DeFi application would like to build with such actors. So let's keep aware of what's happening in the very short term.
Let's talk in the several weeks.